Hello, everyone. This is Terry with Futures.io, and as always, I would like to thank you for joining us today. It's my pleasure to welcome Trevor Harnett for today's webinar, Finding Trading Opportunities Using TPO Profile Charts. This webinar is sponsored by Tradovate. Throughout the webinar, if you have a question, please feel free to type them into the questions box. We'll do our best to answer them at the end of the event. This webinar will be recorded and posted on the Futures.io website within 24 to 48 hours. If you're watching this afterwards on YouTube, please do us a favor and give us a thumbs up if you enjoyed the webinar. And as always, please feel free to share, comment, subscribe to our channel. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @Futures.io. And now, without further delay, I'll hand it over to Trevor. You'll get the pop-up to share your screen again.
Okay. Let me. Okay.
All right, looking good. She's all yours.
All right. Well, let me just give a quick introduction here. This is Bastian from Tradovate. So we're excited to be doing this first webinar with Futures.io and having Trevor here to present for us. So again, excited about this. And if there's any Tradovate related questions, feel free to ask those as well. We'd be happy to answer those during the Q&A at the end. So just a very brief overview of who we are. So we're a futures broker, and we offer some special pricing models that is kind of unique in the industry. We offer a commission-free trading, and we have some other membership-based models as well. We have a cloud-based platform, which Trevor will be showing some of that as well, specific to the TPO charts. So yeah, it's a kind of a new and exciting broker in the industry. So hopefully you will check us out, tradovate.com. And again, if there's any questions on us, I'd be happy to answer those. So just a brief general disclaimer here that I'm going to read now, and then I'll pass it on to Trevor. So brokerage services are provided by Tradovate. Tradovate is a member of the NFA and registered with the CFTC. This is not an offer or a solicitation for brokerage services or other products or services in any jurisdiction where Tradovate is not authorized to do business, or where such offer or solicitation would be contrary to local laws and regulations of that jurisdiction. Futures and options trading involves substantial risk of loss and is not suitable for all investors. Investors should understand the risk involved in trading and carefully consider whether such trading is suitable in light of their financial circumstances and resources. Past performance is not necessarily indicative of future results. All right, well, thanks again, Futures.io and Trevor, and I'll pass it on to you.
All right. Thanks, Bastian. Thanks, everybody, for taking the time to join us today. This is the first webinar. There's another one later in February. I'll post information to that later. But I'm bringing that up now because a lot of what I'm going to go over today is going to lay some of the groundwork for that webinar. I'm assuming that a lot of the people that may be in here have some knowledge, but maybe not advanced knowledge of profile or TPO charts. And I want to make sure I cover some of the basics so you understand a little bit of the history and some of the mindset that I'm approaching these webinars from, as well as how you can put them to use. So there's a picture of me. There's my Twitter handle. You could follow me on Twitter. I'm not too active, but I do post some charts and just trade ideas from time to time. So that's how you can at least follow me or get in touch if you need to. But without further ado, let me jump right into the webinar. So what are TPO charts? The first thing is, what's TPO stand for? And it's TPO, time, price, opportunities. So that's just a term that is stuck, time, price, opportunity charts. And the terminology you'll hear me use maybe throughout the webinar, but you definitely see it all over on the internet and Futures.io is market profile. Well, TPO charts are market profile charts, essentially. It's lingo. It's like Coke versus a cola or Pepsi. You know, there's brand names and then there's essentially the same product without that name. So I don't want you to be confused if you hear me use the term profile or market profile or TPO charts. Think of it as all one and the same. I don't want that to become a stumbling block. But in terms of what TPO charts are, this is my definition, but it's a unique way of organizing trading data into a distribution that reflects which prices the market is accepting or rejecting. So I'll be digging into that as we go through the webinar, but you can see the graphic on the left. And if you're brand new to TPO charts, you're probably wondering why you see letters and not like bar charts or graphs, other types of graphs. And the basis behind that, where it all really comes from, is back when there was pit trading. The floor traders and the brokers in the pit, they all had their trading cards with their badge, clearing firm, and all that on it. But it looks something like what you see on the screen. And there was a big, there's boards, quote boards all over the trading floor, but in the corners at the CME and pretty much all the other exchanges, but there would be a bracket. You'd see a letter underneath the time, and it would be the bracket that is the current bracket for that half hour. So when a trader would do a trade, you can see there where the arrow's pointing on the far right side, they would write the letter of the bracket. So A, B, C, D, and that time slot, say from 9 to 9:30, always had a specific letter. It was always the same letter. And that's what you would write down for when you did that trade. And then these cards obviously would get collected and get recorded upstairs by the clerks, and that's how trading was done. You didn't timestamp it specifically like we do now when we trade electronically. Everything's timestamped automatically. But back in the day, this is how it was done. And so moving on, these came about from Pete Stottlemyre, who was a trader at the Chicago Board of Trade, and he's the one that really came up with this graphic. So it's really him who this is attributed to. And basically what you see there on the left, look at the graphic on the left, is a TPO chart for this is the S&P E-mini from the other day. And let me just describe it and break it down so you know what you're looking at. You can see the letter A. I'm not sure if you guys can see my cursor, but letter A, there's the kind of the cyan color. And then you see the price scale over on the right side here. Basically, those A's represent all the prices that traded during that first half hour. So that's the way I have my chart set up, which is what this screenshot was of. Is the letter A is the RTH, the regular trading hours. It's the first half hour. So in Eastern Standard Time or New York time, that is 9:30. So 9:30 to 10 o'clock. And so this was the price range from 9:30 to 10 o'clock. And it just puts A's every time price trades a new price on the price scale. It'll print an A. When the clock rolls over to 10 o'clock, so from 10 to 10:30, it goes to B. And B then reflects all that activity, or essentially the price range during that half-hour bracket. So going back to the analogy, not the analogy, but the screenshot here of the card, if a trader did a trade at 10:15, he or she would write the letter B in bracket. And anyway, over the course of the day, each half-hour bracket has a letter, so A, B, C, D, and so on and so forth. And what it does, as it trades a price, it just keeps stacking the letters. So the more price trades at a certain level over the course of the day, depending on what bracket it is, these letters just get stacked on top of each other. And if it then rolls up to a new price, look here where C, this single C is, from, that would have been 10:30 to 11 o'clock. So at some point during that time frame, it went above the price that had occurred in the previous bracket, and so it pushes in or stacks on top. And what you can see, and it's much easier when you see these things happen or kind of roll in real time. You can see how they stack, but the bottom line is it creates a distribution of where price is trading or has traded. And what that provides a trader is a very unique view of price activity, a lot different. You can tell this looks a lot different than a candlestick chart or some other type of bar related chart that you're used to looking at. And so that's really part of what I'll focus on today, is just the different view, the different mindset that these charts bring to a trader. Now, just to the right, this is a volume profile, and this is simply recording all the volume at price. And I'm not really focused too much on volume profile today, but volume profile and TPO charts or market profile charts go hand in hand. You'll find that a lot of the people that use one use the other, or they have a healthy respect for one another, to say the least. Moving over to this graphic, this is all it is the letters here that are all stacked up, just blown apart. So think of these, actually think of them like bar charts, like a can bar, whatever, but half-hour bars, because each letter, like all these D's, this is a half hour of price activity. E, another half hour. And so you can see this probably looks, for those of you familiar with bar charts, looks a lot more like a bar chart, and they're fixed at a half hour intervals. So I didn't say that up front, but TPO charts really move or build on a half-hour basis. That's the way it is because of the brackets, going back to the way they used to record those trades in the pit. Half-hour time slots, that's when the letters would change every half hour, and that's how it kind of got into this. So anyway, hopefully you can see how these things break apart, and when they're collapsed, it creates this distribution. Okay. So this is kind of the crux of what I want you to think of these TPO charts. It's a way to organize data. I know it's called a chart, and it is a chart, but it's really a way to organize data, and it's doing it a lot different than your candlestick charts. And I'm not here to bash candlesticks or any other chart type. I use candlesticks every day myself, alongside these charts. But TPO charts have unique characteristics you can build, or that you can use to build trade ideas. So what I tried to do here is take what I saw as unique characteristics of TPO charts or market profile charts and attribute one word. And I put some thought into this. I mean, you could come up with other words. It isn't like there's a single word that is an answer for these characteristics. But I really want to try and keep it simple. I'm really about trying to keep things as simple as possible, but make it useful. So TPOs, which are the letters, each of these letters, like this single letter A is a TPO. This letter A is a TPO. This letter C is a TPO. So these are all TPOs, and you can see it just, there's a number displayed on the total number of them in a profile. But that's essentially TPO is a single letter. But essentially what it is data. The TPOs are organizing, or they're capturing all that data and creating these views that you see, such as the actual shape of the profile. And there's all kinds of other nuances, which I'm really going to touch on in the second webinar, but you're going to get to see some of those things. But the TPO is really a data, something that holds a bunch of data. Time versus volume. and the word I kind of use there is compare. So going back to the previous slide, this is a time profile, the letters, that's time-based profile. So as price trades over time, it's putting these TPOs in and builds a profile. This is a volume profile, so it just continues to build all day and gets fatter or wider as more volume occurs or builds at a particular level. So these two things are different. One is volume based, one is time based, but they often do align, not always, but that's why I use the word comparing them, because that's where you might see some trade opportunities. Value area, and I'll define that in another slide, but a value area is where the market, I like to think of it as where the market is finding consensus. And I'll show you an example of that today. So it's really, where is it finding consensus? Where is it happiest trading and building volume and time? Initial balance, that I think of as base. That's the base of the profile. We're going to dig into that as well. I'll show you an example of that and give some trade ideas on that. And then the last one, and I'm not saying there's not more characteristics, but POC versus VPOC or VPOC, that's point of control and volume point of control. And I just use the word popular. So that the POC and the VPOC, the POC is the widest price row, where the most time was spent. That's the way to think of it. So this would be considered the POC. The VPOC, volume point of control, is actually where the most volume occurred. So you can see they're fairly close together. They're not exact here, which is fine. They don't have to be. And it's when they're a lot different. There might be something you can key off of for a trade, but we'll talk about that in a minute. But I just kind of wanted to define that for you. So here's a quote from one of my mentors, Jim Dalton. If you have studied market profile very much at all, I'm sure Jim is a familiar name. He's written some of the books, some of the Bible for market profile, which is Mind Over Markets. I have it on my desk here, and some other ones. But Mind Over Markets it's a good book. But one of my favorite quotes from him is, "Price advertises, time regulates, and volume confirms or rejects." So there's a lot in that, but think of it as price is really an advertising mechanism. As it moves up and down, it's drawing in buyers and sellers. They become more or less interested as it reaches higher and higher prices or lower and lower prices. It advertises to bring in buyers and sellers. Time regulates. So what's that mean? Well, it simply means the opening bell starts trading and the closing bell ends trading. And so think of it like that. It basically starts it and ends it, and then moves it throughout the day in whatever time frame you're looking at. But the point is it regulates it. And then volume confirms or rejects. So as price is advertising, it's bringing in participants, and sometimes it really brings them in heavy, where there's a lot of activity or a lot of volume, and then there's other times where there's little, where it's being rejected, and you can see that in volume. And so there's not a lot of words in that quote, but there's a lot of information. I feel it's just one of my favorites when it comes to thinking about these TPO charts. So, and I'm going to be getting into a live, I'll get into the software here in just not too long, and I want to show you some things on that, but a few more slides before we get to that point. So how are TPO charts used by traders? If you're new and you might be like, how's someone use it? When I first saw these things, I saw letters and I'm like, why am I looking at letters when I'm trading prices? And trading's all about numbers. Why letters? But that's where I'm trying to take you, is it's a different mindset. The letters are really a way to organize the data. And you got obviously you got your price scale and that you're trading price, but the letters are a way to organize what you're seeing on the screen and provide and create that graphic. So some of the ways, and again, this is not a comprehensive list, but a lot of what you hear me talk about are things that this is just the way I use it and the way I've taught it to others, the way it's been taught to me, and things that hopefully you can find useful when it's all said and done. But market structure, that might be a new word for you, but the way I like to think of market structure, you can have poor structure, you can have good structure, and you'll get a feel for these profiles the more you use them. But one of the things I like to look at when I use the word market structure is trending versus rotating. And you get unique structures in the profile, shapes. When I say structure, I'm going to use the word shape here, but on a trend day, you'll tend to see a thinner profile, a little more stick figure-like, where on a day where it's rotating, you will see more of a fat profile, kind of shorter, squatter profile. And so those are all cues as traders we can use to help form up how we want to approach our trades. Are we looking to buy breakouts, or are we looking to say the market's breaking out to the upside? If it's in a trend day, that's a nice opportunity to buy that breakout to the upside. If the market's been rotating and tests an extreme, like I say a new high, odds favor actually selling the new high and looking for the market to rotate back down. Now, that's just one, that's like a use case and ways you can think about applying this information because of how it's organizing it. So reading the auction, that's another one. And it kind of goes with what I just said. The market is one big auction, as we mentioned in that previous quote, price advertises, time regulates, volume confirms. Think of it if you went to some auction, I don't know, some livestock auction to use an example. The auctioneer starts the bidding low and starts trying to find he starts at a price usually high and starts lowering it until someone steps in and says, bids. And then all of a sudden it starts a frenzy a lot of times, and price actually gets bid right back up to where he started, where there was no interest at first. And then finally that auction ends. Well, it's the same way really with the markets we trade. The markets get chased to a high price until the buyers just run out of gas and the sellers become overwhelming because it just gets to be such a nice price that they want to take profits or actually get short. And same then on the downside. And so these profiles can help you read the auction because of how the data is organized. Market generated levels. So that simply means, as this auction is happening, you will have levels on the profile that can essentially, they get built throughout the day. They're generated as the day wears on, and you can use them as levels to lean on or trade against, and as well as looking back at prior days. So each day is going to have a high volume price, VPOC, volume point of control. That, and you're going to see here in a little bit, that can be a level to lean on or as a target. So that's a market generated level, and it's nice because you're not using a lot of technical analysis here. It's a much more of an organic way of reading price action and reading the market. Next, context. So that one means a lot to me because I've been a scalper. That's where I started out back in 98, 99. I was a scalper at the CME upstairs at the exchange. And I was a member for a while. And but I was scalping. I was trading hundreds, sometimes thousands of contracts a day. And a lot in and out. And I had some specific ways that I was trading, but obviously I was very active. But as time's worn on, with the algos in the market, and I'm not here to bash algos, but they've changed for in terms of scalping. They kind of rule the roost there. So I've had to evolve as a trader and step back and try to see the market from a bigger, longer term picture, and using the profiles can help me step back from the noise, get away from the ticking, all the price action that happens that really is just noise. In fact, just recently, and this doesn't have much to do with profiles, but I've stopped using the domes. I just trade from the charts now. And I do that because I find that the length of time that I'm able to hold trades is immediately increased, simply because I'm not focused so much on the dome and all the price action, all that noise. I just focused on chart levels, structural chart levels on the profile in my candlesticks, and then simply I'm able to see, because I'm focused more on the charts, I see chart patterns more. I'm more in tune with the chart. So it boils down to focus, and what are you focusing on? And that doesn't mean, well, you don't want to be focusing on too much. Too much just clouds your judgment. You want to be able to step back. That's the whole point here is context. Step back, understand what's important to look at, and understand what's not important to look at. Then the last point here was unique TPO chart nuances, and that is because we're looking at these letters and we're not looking at the normal chart, but we're looking at a profile, it's a shape. You're going to see things. There's nuances on these charts that are worthwhile noting and being aware of, and that's something that's definitely more advanced, and I will be touching on those in the second webinar. I'm going to touch on some of those, and those are some that I use personally, but that's not for today. But definitely there's some good things to be aware of there. So let's take a look at these. I'm going to go through these pretty quick, but initial balance, it's the first 60 minutes. So it's the first two brackets. So looking at that graphic I got right here, A and B, I actually have them colored, and that's the way I do it on my own charts. Is I color the initial balance, the first two brackets, its own color, and I do that because it's very important to me and it's very important to the market. That is the market open. It's the RTH open. It's the first hour of trading. It's besides the last hour, it's when the most volume gets done. A lot of times it sets the tone for the day. And so think of it as the base. It goes back to that one graphic I showed you. The initial balance, I think of it as the base. Is it a narrow base? Is it a wide base? You can see here on this graphic, and this I think was just yesterday, and it wasn't the full day because it ended up breaking down. But up until late in the afternoon when the FOMC announced, it was a really wide base. We had an opening, a big opening move, and it created this wide base. So that is important information. You may not even pick up on that initially when you look at this. You might just see a normal distribution. But what you got is a really wide base that was put in on the open, which provides stability. And I say that because B period wasn't able to go higher or lower. It didn't take out the higher low. It started to settle in. So what you end up being able to count on are these extremes, secure high or secure low. There's pretty high likelihood that it's fairly secure, or that the market's not going to go much beyond it before snapping back. Now, these are all things you need to obviously test for yourself and watch it, but that is one of those nuances when it comes to initial balance that you can pay attention to. Another one would be, say we gap open higher and we have a real tight, fairly tight range in the first hour. It's just auctioning. It's real choppy. It's the type of action that us as traders get real mad, maybe slam their fist on the desk and say, this market's not going anywhere. You're frustrated because it's just chopping around. It gapped open. You kind of were hoping for an opening drive or a gap fill, something, but it's not doing anything. Well, that's actually, while it's not doing anything, it is information because it's forming a small base, short base, and it's out of balance because it gapped. So when it does break out of that, it can actually be reason for a big move. It just took a while for it to happen in a big move because the base was narrow. It didn't have much to really support, and boom, you get a nice break higher or lower. I'm just saying that as I'm trying to drop some trade ideas so you understand this isn't just a profile or a shape of letters. There's a lot of strategy that you can apply based on where we're opening, how we're opening, the fact whether it's a wide base, narrow base, things like that. Another way this gets used, and I'll show you in the software because the software has a really nice feature of automatically projecting what I call price targets. And I'll show you an example of that. So moving on to the next one is value area. So I referenced that earlier. For those of you who don't know what value area is, value area is simply it's where the market has traded 70% of the activity. Think of one standard deviation from the POC. So you can probably, it's kind of hard to see in this graphic, but do you see this white shaded area, this box kind of right here? That is the value area, the time-based value area for this profile. On the volume profile right here, it's much easier to see. It's this dark blue. That is the value area, and that represents where 70% of the trading activity has occurred. So I don't really use the value area like probably a lot of people. The way I use it is in context from the prior day and how it's developing the current day. So is value developing higher or lower, or is it overlapping the current? Is the current day overlapping the previous day? And I'll show you some charts so you can see some current action on that. But that's how I use it. You will read a lot of material if you do research on this. People will look to buy or sell the value area high and value area low. Nothing wrong with that. I'm not. It really depends a lot of time on how the day's setting up. It is a level. It definitely is an intraday level. So you can use it that way. I don't, but that's just because of I don't know. That's just my trading style. I'm not. I don't really key off that level, but I want to bring it to your attention because it is a level that you'll hear talked about a lot. You'll see it referenced a lot, and it does represent where the market has spent 70% of its action. So I tend to focus more on the extremes of the day, the market structure, and just even the highs and lows of the brackets. And I'll get into some strategy probably in webinar 2 on that. I got to make sure I stay on track here time-wise. All right, I've kind of talked about this POC and VPOC. This is just kind of compares them. On the left, you got POC. POC it's kind of hard to see, but it's this yellow shaded row. This would be your POC, and this purple would be your VPOC. And so POC is your time-based. That's the widest. It's the area where it's spent the most time. That's basically it. And I'll reference, the way I'll use that is the location of it versus the close. So here we closed here. The POC was here. Not anything dramatic, and it really wouldn't mean much to me. But if the market had closed way down here and the POC was up here and the VPOC was up here, then that information becomes much more meaningful to me in the overnight session and come the next day when we open. And let's move on here. So before I get into the software, I just want to make this last statement, always consider the auction. What is the market trying to do, and is it doing a good job of doing it? And that might seem kind of like you may not be sure what to make of that. The market's trying to facilitate, the market is facilitating trade at all times. And you will see it, trending higher, trending lower, or chopping around. If you see it moving higher, say it's pressing new highs, it's poking through a prior high, it's printing some new highs, but volume is real light. Tempo is drying up. There's not a lot of tempo, not a lot of action. That would be a good example of not doing a good job. So yes, it's trying to go higher, but it wouldn't be doing a good job. So that's an example of an opportunity to get short. And I'm just using that as an example. There would be a lot of different ways to think about it, but think of just the quote next time you're looking at the markets and you're watching it trade. What is the market trying to do? Is it trying to go higher? Is it trying to go lower? And try to answer the question for yourself. Is it doing a good job of it? And think about that. Okay, so I just had this on here. I may come back to this graphic. So you guys can reference it. Right now it's not, it probably doesn't make any sense. So let's just, let's go here. So here's my profile chart of the S&P E-mini. And there's a bunch of things I like about these charts. I'm going to breeze through some of the things that I use that are just, they're easy to use, easy to do here in the software, and I want to make sure you know how to do it, and also why I think it's important. So you see these gold or yellow lines that extend out. Those are the volume point of control, and they are, the word you'll see in the in terminology is a naked volume point of control, where it hasn't been touched. It's not been covered up by price. So here, going back on what is this, Tuesday? This is one up here around 38.50. The price has not gone back up and traded that price, so it'll continue to draw it across until it trades. And you can see how these get shut off once price trades. But let me show you how to set these up. But the main point here is these can be used as targets or support and resistance levels. So when the market's breaking here, initially this would have been a target, and then there would have been another one down here. Here's how you set these up. And I like how these charts are tabbed. I actually have 4 tabs. I'm going to click the gear and click the symbol. And I'm not here to go through all the settings. I really want to show you the things that I find useful, and just show you how to set it up so that if you try the software out, you'll know how to do this, or you can reference back to this. But there's a TPO section right here. That's the time-based section. Think of that as the letters, the POC for the letters, the value area. But here's volume profile. First off, I have it enabled, and you can play with all the colors, but you want to turn on the POC and then click this box right here, extend. And by doing so, it's going to extend this orange or yellow colored line. And that's how you do that. So it's real easy to turn that on and off. Another one of my favorite features is the session management, how you can manage sessions. So you can tell right now you don't see the after hours trading. This is an RTH session that I have charting. Now it is showing where the market is trading right now. This is a current price right here in the after hours, but it's not plotting TPOs. So going back again to the gear, you can see I have one session defined, and it's 9:30 essentially to the close. And I could just say 4, so it wouldn't catch that last 15 minutes. I could hit save, and there it is. So that's your RTH session. But here's what I want to show. You can choose the start letter. So I told you I start my profiles, my RTH session with the letter A. Now, if you want, you can view a 24-hour session or you can view them broken out. This is what I like to do. So just click Add Session, and the way you need to set it up is the way that I show right here. I'm going to show you this just to save time. You see this here? You're going to set the first session. This is Eastern time, so it starts at 6 o'clock and it goes all night to 9:30. And I have it start with letter Q, and I have those first two, that initial balance of the overnight session, color coded, which I'll show you how to do that in a minute. And then I set the other, basically the day session, the RTH session, 9:30 to 5. That's A and B. I have that color coded. The A and B is that initial balance, and I have it start with the letter A. So that, well, that's how you do it. And what it does, it'll end up creating split sessions. I think I have one right here. No, maybe it's this one. No, I don't. Okay, let me just do it real quick. Add session. I'm going to change this one to be 18, 0. This one will be 9:30. And set this to Q. 9:30 to 5. Start with letter A. Done. Save. And there you go. So it's gonna we're in this session right now. It's not trading, but when it opens back up in the after hours, it'll start plotting. So here was last night's session. This was yesterday's RTH. Okay. What else did I have on here? Oh, customized letter colors. You saw me just do that, but this is a simple feature, but it's really helpful because as you're learning these profiles, if you color code the initial balance, which I've already told you the importance of, it's really, really helpful to be able to see on these profiles where that first hour of trade. So as the day wears on, here, let me split this. I'm going to split. As the day wears on, this was yesterday, you can see the market was rotating around, right? And then it finally broke out here after, or when I think during the FOMC press conference. But at that point, it's clear it's taking out that really wide base we'd been spending time in, and it broke down. But it really helps you keep focused on some of the more important times of the day. And you might also color code the last hour. It's really neat to see how that lines up with the first hour. So is it higher, lower, things like that. So I didn't show you, but if you click on a letter, you can see the little finger, the hand. You can split all profiles, split it letter, undo split, merge the profiles, or remove all. I'm just going to remove all splits. And in fact, I'm going to go back in there and remove that overnight session as well. No, leave it on, because we might end up getting to see a trade. The other stuff I wanted to touch on, oh yeah, initial balance extension. So let me split this out. Here's today. This was today's action. And do you see this bar here? This represents the initial balance. It's just a bar. It shows where this A and B bracket was. And you can set it to extend that. And what do I mean by extend? Well, right here, initial balance, and there's an extension. You can add more than one. I only have one. But I have it draw 100% on both sides of the initial balance. And what you can use, you'll find that you can use that as a target, or think of it like, I don't want to say Bollinger Bands or standard deviations, but market, when it starts to get outside that initial balance, these can serve as kind of a band or targets, if you want to think of it that way. And you can add more, 150%, 200%. But the point here is if it gets outside this, you can start to see, well, what's 100% up? And a good strategy, actually, this will be a great example. Let me show you. This was yesterday. Let me zoom in. Okay, you see this? This was yesterday's. The initial balance was here. It's this here. And an extension, 100% of it was here. A rule, not a rule of thumb, but a strategy is if we single print, and I didn't tell you what single prints are, but essentially single prints are where you just have a single row or single column. Let me show you briefly. Sorry, there's just so much. Single print would be this guy right here. See that letter K? If there's only one letter, there's not another letter stacked on it. So when you single print out of initial balance, or when you basically create single prints, you can use 100% of the initial balance as a target. And boy, did that work yesterday, right down to, I mean, it actually went through it. But if you'd gotten short up in here or on this retest, this is it's a nice target. And so that's one way. That's a strategy. I use that. It's one of my playbook setups. And well, it is what it is. And if the market would come back and accept back up into range, then I would look to be stopping out. Risk management is always key. Risk management is actually the most important. You have to know where you're getting out before you're getting in. So with any strategy you implement, you want to know where you're getting out first. And but anyway, this is nice way to identify a trade and then also create a target based on the trade. So you're not taking just a couple points on a trade that was actually worth, 50 or 60 in this case. Okay. That was a lot of what I wanted to cover in session one. Basically, I want to give you some theory. You understand what these things are. Just why do people even use them? But then kind of this last part, a little bit more from a trader's perspective, seeing some software that would shows you how to implement it. How to implement it. Is it from a trader? Because ultimately, you need to have things need to be easy to do on the charts, and it's got to be quick. You got to be able to make these decisions quick and have a good read on the market. But anyway, why don't I turn it over to questions, I guess, at this point. I'm sure you guys, I don't see questions, but I know one of these guys do, so I'll why don't you pose those and I'll put this slide up.
How are we able to get these charts? What platform or system are they a part of?
Yeah. So this is Tradovate, the platform that I'm showing here. They are Bastion. You can chime in if you want, but they're built into the platform. You don't have to. They're just free as part of the platform.
Right. Yep, that's correct. So everything that you see here is available. It doesn't matter if it's you're on the commission free or the membership free. You just have the platform. So as long as you have market data and you just need the top of book for this, you can use the TPO charts.
Awesome.
One other question, or not question, thing I didn't mention that I like is the ability to trade right from the charts. I didn't show that, but you can trade right on the chart or have the dome up like this graphic shows and trade from the dome. But being able to see the TPO charts and then put your trades right in on those levels, at those levels, is nice.
Yeah, that's a good point. just to add to that, and you can modify orders from the or use bracket orders from the DOM or the chart, and manage your position on both of those modules. The DOM and chart, like you kind of have it like this in the screenshot. You can have it combined like that.
Awesome. There's another question he asked. What is the significance of the purple line in the center of the TPO chart?
Yeah. Okay, that's the midpoint. So that's half back. You might hear it referenced, half back or midpoint. It's a 50% of the range. So take the high and the low of the range and divide it by 2. It's a half back level. And so a lot of times you'll see it's used as a reference point when trading. It can be used as a target. The market will pull back to it a lot of times. And so that's what that is.
Okay. He says, what does it tell you when the market closes near the low and the POC is in the upper middle, like on your TPO example?
Yeah. No, that's a good question. I'm going to go into a chart where I don't got that overnight action. So basically, today we closed down here, right here, 3780-ish, and the VPOC is up here, just above 3800. Now, it's definitely some distance, but to answer the question, when you have volume, VPOC, or the POC at a much different level than where we closed, you got to realize that volume represents a lot of trading activity. There's a lot of people, traders, that conducted trade up there, and here we are where price is a lot different, at a lot higher or lower level based on, say, the close. And well, actually, let's look at yesterday. Right here was the VPOC yesterday, right here, around 3780, and the market closed down here, all the way down here, 3715. I mean, that's 65 handles away. And this ends up like a magnet. These guys, they're stuck, in a way they're stuck long when price is down here. But as price starts to creep back up, it's a magnet. And so a lot of times now you end up getting guys stuck short that the price can race up. So today, that didn't surprise me. It opened up pre-market. It rallied, and it opened up and drove, and it actually took this right out. But the whole point is you can use it as a level to realize when traders are stuck long or stuck short. So for instance, one more example, and then I'll let you ask another question. If today, it was really crucial that we opened up today and went higher pretty quick. If this thing would have started drifting lower and then if it would have took out this low, it was gonna, to me, I thought you would see some real selling come in, because there was a lot done up here and they're stuck way higher, and it would have, I think you could have saw some real selling come in, more than we've seen in a while. So it's fortunate the market kind of caught itself today and rallied back up. And it's funny, it kind of closed right at that level for the most part.
Okay, there's a couple multiple questions here, so I'm going to try to combine them. But they're asking, how do you enable the chart, because they're not seeing it in the chart types, or how do you set up one of these charts? And then on the other side, there's asking if you can show your settings, because they're not seeing a single print as yours does. It overlaps.
Okay. Well, first things first. If you click here, click the plus sign and go to chart, and I'm just going to drag it onto my screen here. Now I'd like it to go full screen. Let me go full size. I'm going to punch in a symbol. Select. Go right here under chart. Let's see. Where's chart type? Yeah, right here. Choose TPO. Click the T, and if you're on a web, let's see. I don't know if this is on. I'm on a PC and I've downloaded the application. It's on there. I think if you're on the browser version, I'm not sure it's on there. Another thing I like about the software is it runs on the Mac. So I have it running on my Mac too, and you can get these on your Mac. So on my PC during the day I have these up, and then I'll go over at nighttime. I'm on my Mac and I can just pull them up and continue doing my stuff. So that's where that is. And the other question, you said you wanted to see my settings. I'm not sure what you said about singles. I think you were saying you don't see a sing. Did he say he doesn't see a single?
Yeah, he's not seeing a single print. It's overlapping.
Okay. Well, the price scale is probably set to auto, and based on how it's compressing the profile, it's just not showing it. So like if you hover over the price scale, and I'm using the scroll wheel, it'll compress or stretch it out. Now mine's set to auto, so it keeps keeps snapping.
I do have a question for Bastian. They're saying that the TPO is not on the browser-based app.
So it's it's on the browser-based as well. However, we're kind of going through a sort of transitional phase where we have this old chart module that did not have TPOs, and then we have the chart beta, which is now called just the chart module. That's what you need to use for TPOs. Now there'll be a chart legacy or legacy chart as well as a module, but you wouldn't want to use that one because that's the old chart. So if you're on the web-based and you click on that same plus that Trevor clicked on in the upper left-hand corner, the add modules, then it'll look a little bit different, but it'll have still have the chart module at the top, and that's the one you need to use. But actually no, on the downloadable right now you'll see legacy chart at the top. Now on the web-based it'll show you chart, and that's the one you need to use. Whereas on the downloadable, it's kind of flipped around. The new chart is not in the top section right there. That's the difference. But you'll be able to use it on the web base as well. Just make sure you select the chart module, not the legacy chart.
Okay.
So just to go back to that single print, I can see I don't have it now because I've kind of compressed the scale. But if you go over and hover, and I'm just using my scroll wheel, see how it stretches it out. Now actually, there's a couple. So it's basically compressing the price scale, and it'll auto fit the TPOs to fit, and that's just how that's how it is. I usually just leave it on auto scale, and then that way the chart's kind of drawn. If it single prints, it single prints. I don't overanalyze it, I guess is what I'm saying.
Okay. One second. I'm trying to read through the questions. Sorry. Questions are coming in. They're moving. Where did you go? On average, how long did it take you to adjust from candlesticks to the TPO charts?
Well, it's not that I left candlestick charts. I still have them up. I have a 15-minute and I use a 1-minute more for my trigger chart. But I think of this as like another screen that I use to keep that bigger picture view, the context, the market structure, all the things I talked about. So it's not like I set out to move myself from candles to profiles. This is another tool that I use to help on my perspective of the market. So there's really I don't have an answer to that, unfortunately.
Okay. Can you compare the TPO with today's daily chart, 15-minute movement side by side?
Yeah. So let me get rid of this one. Here's a 15-minute. Oh, that's my NASDAQ. Let me just change that. All right. This is a 15-minute. There's a 15-minute here. Oh no, that's 30. Sorry. 15. And right there. So you can see up and then down, and this was kind of that open up and down. I don't know. I'm just showing you. I don't know what the question is other than just showing it to you.
He says, how do I compare the handler versus the chart candle?
Well, these are 30-minute bars. On a profile, they're 30 minutes, and really, if you're going to compare them, you'd probably want to change this to a 30-minute. But I mean, you can tell it kind of I don't know.
Has the same
You can look
shape.
at high and low.
Yeah.
They're going to be the same. You can see the shape. They're essentially the same. But the benefit of the profile and the whole really idea is when you unsplit it, you get that distribution. Now, this is ugly market structure today. Really ugly. And it's just...
Okay. So I got it. So inside the bar, A is the beginning, and then whatever the last letter is going to be the end of the bar.
Yeah.
So that's how you tell the direction inside the bar. Got it.
Yeah. Yep.
Yeah, that was the next question. He says, what does a letter mean? The letter is the corresponding block of time inside that bar.
Correct. So each letter represents the bracket that it's assigned. So when I hover over, you can see, like when I hover over B, it says 10 a.m. So that's 10 a.m. my time. So 10 to 10:30, that's all the activity in that half-hour bar. And it shows you all the data when you hover over it.
All right, he says, thank you. He says, I see volume profile on the right of your chart, but I don't see it on yours.
Well, I don't know. I have it displayed here on the to the right of each day's profile. And you can turn that off if you don't like it. It's just an option. I like to see it kind of side by side, getting back to that whole compare. Just kind of keep everything in front of me.
All right, let's see. Can you talk a bit about buying or selling tails?
Yeah, I'm actually going to be talking about that in the next webinar. That's something I have slated. We'll go through some examples on that. And we'll look at it. But to kind of just touch on it, a buying tail is where the market probes lower and gets bought back up. And so going back to, what is this, Monday, you had one. D period was that's the fourth bar, right? So it's A, B, C, D. So this was like mid to late morning, and the market probed lower and was really rejected. And so this is considered a buying tail where buyers step in. I'll be going into more detail on that. That's more of a nuance, certainly, that you see in profiles, and it's different than what you would see, like this tail here, because this is late in the day.
Is there a way to change the amount of time in each of the segments, or is it stuck at 30?
That's a good question. I always keep it set to 30, and when I click on this, it looks like it's set. It's a set time period at 30, which is
Yeah,
the
I confirm.
standard.
It is set to 30. There's no way to change that. But Trevor, I think that is I guess the official
Yep,
time frame, right?
yep. 30 minutes. That's the convention.
Okay. We're getting a little long on time, so I'm going to end it with this last question, and I just would like to know some of the topics you're going to cover in the second webinar. And there was a question on when that's going to be, and that is February 25th. So. All right. So what other topics were we going to cover in that webinar?
Is that a question for Trevor?
Yes. Sorry. Hello? I don't know if he muted his mic or.
Oh, sorry. Can you hear me now?
Yes. Yes.
We're going to look at buying and selling tails, as we just touched on. We are going to look at single prints. I'm going to get into more detail on that. We're going to look at one-time framing. These are terms that may not make any sense to you, but these are things I will get into. We're going to look at poor highs, poor lows, weak highs, weak lows. There may be some other things, but those are kind of some of the nuances that we're going to look at in the next session.
Awesome. Thank you for the webinar, the information, and for spending some time with us this evening. If you're watching this afterwards on YouTube, if you have any questions, you can visit the Tradovate.com website right there and learn more about TPO Profile charts. You can also visit their AMA thread on the Futures.io website and get direct support and ask questions. I'm going to post that into the chat now for the audience as well. Again, thank you for the webinar and information and for spending some time with us this evening.
Thanks, everybody. Have a great evening.
Thank you very much, everybody.